Good morning, it's Jeffrey Christian of CPM Group. It's about 10:25 on Thursday morning, the 25th of August, here in New York. I'm filming this a day early because I will be traveling on Friday. Several of us from the CPM Group will be at the Silver Symposium in Spokane next Tuesday and Wednesday. So we'll also do something special possibly for the Tuesday video, but this will be released on Friday the 26th of August. In terms of where the markets are, they're pretty much where we thought they were going to be. There's a great deal of uncertainty going into the Kansas City Fed's Jackson Hole conference with Jerome Powell making an important speech tomorrow, Friday. And the markets are jockeying around trying to figure out what's going to happen. Today, I want to talk about when investors sell silver. And I know a lot of people will think that's heresy, but the reality is that investors do sell silver. And sometimes they sell it for long periods of time. You can see how investors were net buyers in the 60s when the price of silver was $1.29, and the United States Treasury was getting silver out of circulating currency and as out of the monetary system as backing for silver certificates that the Treasury issued that were basically money convertible into silver at $1 an ounce. Investors sold, and they sold for about 8 consecutive years on a net basis. Very important to understand net investment demand. I'll get back to that a little bit later. Saw the price of silver go from $5 to $50, and investors started buying a lot of silver. 1979, 1980. As the 80s progressed, they bought consistently less. There were many people who were disappointed that the price of silver didn't stay at $50 or didn't rise back to $50. And as the price went to $16 and then $7 and then $5 and then $3.50, they or their heirs were selling off silver. Yeah, there are two types of investors. There are stackers and there are investors. And investors will buy and sell, whereas stackers tend to be much longer term buyers and holders. That said, from 1990 until 2005, 2006, you had about 16 years of consistent net sales by investors who had become disenchanted with silver's inability to get back to $50 in the 1980s. There may be a lesson there for people looking at the silver market today. It's hard to say. On a net basis, investors turned positive around 2006, and they started buying more and more silver. Came down around 2013, 2014, 2015, and it's picked up. I'll get back to this net silver investment in a second, but I want to talk about some of the other things. The reason I decided to talk about when investors sell silver is that there are two topics that have been popping up in conversations recently. One of them is, given the shortages of official silver coins, investors have been buying a lot of medallions, which are rounds that are made by private companies as opposed to official governments. And CPM Group has always advised its investors, if you're going to be buying silver in small 1-ounce denominations, to buy silver official coins. And there are a couple reasons for that. I mean, one of the biggest reasons is the resale price that you get when you come to sell your silver at some point in the future. Right now, given the paucity of official coins from the U.S. Mint and other mints, you're seeing investors buying a lot of medallions. They have lower premium, and quite frankly, the high premium that you're finding at some places on silver eagles is not exactly the most intelligent place to buy silver at this point. So people are buying the medallions, unofficial coins, if you will, as a alternative to official coins. The question and the concern is what happens when those investors go back to reselling those medallions. Because a lot of coin dealers and other precious metals dealers will look at them and will discount them heavily relative to official coins. Yes, and this is a silver eagle. Yes, this is a silver maple leaf. This, I'm not quite so sure, because it came from a company as opposed to a government, and maybe I want to have the stuff melted down and assay before I determine the purity of the silver, et cetera, et cetera, et cetera. So that's one of the issues that's been popping up in some discussions. The other one is how much silver investors are buying. And the reality is that many investors get better prices when they try to resell their silver, their metals, not just silver, but other metals, from dealers other than from the dealers that they originally bought the metal from. Some dealers offer better prices when you're buying silver or gold from them. Some dealers offer better prices when you're selling the silver or gold back to them. Now that's important because as a result, what you'll see is that some dealers see high gross sales, but low net resales. And other dealers will see low sales to investors, but higher resales. So we talk to retail dealers all over the world all the time. And you'll hear some of them saying, I'm selling enormous volumes of silver week in, week out, and a lot of it's medallions, and I'm not seeing other investors selling metal back. So I need fresh supplies all the time because from what I can tell, investors are not reselling. There aren't investors taking profits at these levels or selling out of disenchantment. So I need fresh metal. Talk to other dealers and they say, we're not necessarily seeing strong demand. We're seeing stronger demand than we saw 2018, 2017, 2016. But we're seeing a lot of investors sell metal back. You know, people who bought at $12, $13, 5 years ago. People who bought at $5, 20 years ago. You know, I'm not quite sure what my net acquisition price is, but it's really low. It's not $12. So you have to be careful and you have to distinguish between gross sales to investors and net sales to investors. And the investors, the individual investors, have to be careful about to whom they sell. I know that when my mother passed away, she had a lot of silver and she had a lot of gold and a lot of gold coins. She got good advice. Not that she ever took advice from me. But she also had a lot of medallions, what many dealers call junk silver. And it was interesting to try to sell that stuff. A lot of dealers didn't want to deal with me because they knew, you know, that I knew the price. And I actually wound up selling it directly to a refiner that actually was buying a lot of that material from those dealers. And it was very interesting that that refinery, because they saw themselves as a silver refinery. But when we were working with them, we realized they made more money selling refined silver products, not to investors so much as like electrodes for electrolytic plating and plating salts and things like that. They made more money as a seller of refined silver than they did as a refiner of scrap silver. Something that they didn't quite realize, and we've seen that realization or lack thereof at other precious metals refineries too. But the best example is Deek Pereira. Now, if you don't know what Deek Pereira was the company that in the late 1940s, early 1950s probably, Nicholas Deek, who was a fascinating fellow, created a company that found a way around restrictions on precious metals trading and ownership, and also ways around currency ownership in the United States. And Deke Pereira was a good client of ours. Nicholas Deke was a very fascinating person. It's very funny because for those conspiracy aficionados, Nick Deke and Deke Pereira are great histories to read up about. Most conspiracies that you hear about today are nonsense and they don't hold up to scrutiny. But some of the things that Nick did were incredible. And he was assassinated, really. He was shot in 1985 in another enigmatic aspect of his life and the precious metals markets. But Deke Pereira thought of itself as a precious metals and currency dealer. And in the 1980s, CPM Group was working for Deke Pereira. They were one of our early clients. And we were helping them do an analysis of their business. Now, at that time, most people who went overseas would buy American Express traveler's checks in US dollars, go overseas, convert those traveler's checks into the local currencies, and when they came back to the United States, they would go to Deke Pereira and sell their leftover currencies. And similarly, a lot of investors didn't buy precious metals, gold or silver, from Deke Pereira, but they sold the metal to Deke Pereira. And when it started doing this analysis of its business, it realized it was not a big seller of currencies. It always thought of itself as a company that sold currencies and precious metals. But it realized that its revenues primarily came from buying currencies and precious metals that investors or consumers had bought elsewhere. And you see this across the market. You saw it in the 1980s and you see it today. There are coin dealers who will tell you, we're selling a lot of precious metals, mostly in medallion forms for silver because of the shortages of silver eagles and silver maple leafs and very strong demand for silver coins. So we're selling a lot of medallions and we're not seeing resales. But you'll see other people who will say, well, we're selling a lot more, but we're buying back a lot more. And that's very important because it leads to the whole issue of, are you measuring or estimating net silver investment demand or gross net silver investment demand? Now, on this chart, I say, look at 1998. It's a very good example of understanding this. Net sales in 1998 were 171 million ounces. Investors, that was the middle of this 15-year period in which investors disgorged more than 1 billion ounces of silver, mostly in disenchantment because the price had not stayed high, and it was trading basically between $3.50 and $5.50 an ounce for most of that 16-year period. And investors were selling, and in the middle of that, 1998, net sales were about 171 million ounces. Now, we don't know what gross sales were and gross purchases were, but we do know, because it's a matter of public record, that Berkshire Hathaway took delivery of 129.7 million ounces of physical silver in 1998. Bought it in the forward market in 1997 for delivery in 1998, 129.7 million ounces. We assume other people were buying silver back then on a gross basis. So if you take that 129.7, compare it to 171 million ounces of net sales, that means that gross sales were over 300 million ounces. That's the difference between gross sales and buying by investors and net sales and buying by investors. And it's a very important distinction that apparently some people miss. Anyway, you should pay attention to it. I mentioned earlier this week, we have finished our third quarter update of our 10-year projections of gold supply, demand, and price. under 3 different scenarios. We finished that this week. We are wrapping up the silver long-term update. We hope to have that done possibly by the end of next week. I will point out that these are very valuable reports. They're used by mining companies, investment banks, and brokerage houses, and engineering firms for preliminary economic analyses, pre-feasibility studies, feasibility studies, 43101s, and other regulatory and engineering reports on potential new investments into new mines or expansions of mines. They're also used by governments, institutional investors, high net worth individuals, and other people for long-range insights into what may happen in gold and silver. They are expensive reports. They're not like our $160 yearbooks. The yearbooks provide you the basic information. If you really want to know what's going on in gold or silver or platinum, you spend $160 and you read that book. And it tells you a lot of history and analysis about how these markets are structured. It gives you data historically through the previous year, and it gives you our projections for supply and demand for the current year. You don't buy a yearbook because you want our supply, demand, price projections going forward for 10 years. You get that history, you get that basic understanding that so many people seem to lack when they jump into the precious metals markets as investors. If you want that longer term stuff, it's a much higher price point, thousands of dollars. $9,500 is the basic price, but a lot of the companies that buy these things are mining companies or institutional investors who buy these reports as part of a research and consulting package that includes consulting time, the yearbooks, our precious metals advisory, long-term views, and being there to explain what's going on, what's happening in the market. So I wanted to clarify that just so that no one says, oh, well, I'd like to have this long-term report. You mean it's not $160 an ounce a report? No, it's more expensive than that. We will be at the Silver Symposium next week. We're going to be talking about the real silver market. We'll have an open forum question and answer period. And then we will have an evening presentation with Matthew Hunter and Bob Coleman on the evidence for and against silver market conspiracy theories and some of the other issues related to who's been fooling whom, gold and silver markets. You can buy our yearbooks. You can become a retail investor client and receive a host of services from us. And you can read about those programs, order those programs, and read about other things on our website. I will be traveling, so I'm not quite sure what we'll do about Tuesday's video. And I will be back on next Friday. In the meantime, take care of yourself, take care of others, and be careful out there.